Stock market investing begins with the question, do I understand the business and its future prospect? You should remember behind every stock there is a real business. If business is doing well, eventually stock will perform well. If business is not generating earnings, stock will not do well. It's not that difficult to understand. 3M investing framework is based on long-term investing strategy taught by legendary investors. It is based on 3 M's of investing. The first, M, stands for Moat. It talks about framework to develop business understanding. The second, M, stands for management. The quality of company management is key factor on deciding whether a business and stock will be a good investment. This talks more about understanding company management and ensuring their performance is reflected into key financial metrics. The third, M, stands for margin of safety. It doesn't matter how good business and management team, unless stock is selling at reasonable price. Margin of safety focuses on determining stock valuation or intrinsic value. In this session, I will introduce you to the 3M investing framework. It will be discussed in detail over next several sessions. Let's start with the Moat. One of the primary objectives to develop business understanding is to invest with certainty and you don't lose your hard-earned money in stock market. If you don't understand what you are buying, then you don't know what's going to happen to the business and its stock price in future. On the other side, if you know the business well, you'll do things differently. The key takeaway is never invest in a business you cannot understand. We believe in researching businesses that we are capable of understanding. Moat refers to the ability of business to keep its competitor away from taking market share and grow over a long period of time. I will explain this framework to develop business understanding in successive sessions. However, let me provide you brief overview. We analyze business along 5 important parameters, namely product, customer, form, geography and growth. Then we perform business competitive position analysis and identify economic moat like brand, price power, secret, monopoly, and network. Lastly, it's important to validate the evidence of strong moat with analysis of key financial statements. Once we identify a moat in the business, the next consideration is management performance. Warren Buffett believes, the quality of company management is a key factor on whether a business and stock will be a good investment. There are certain critical factors which an investor should use to differentiate a good management from a bad management. We ensure management performance is reflecting in key financial metrics before considering any business for investment. Once your business passes the moat and management criteria, it's worth considering the business for next M margin of safety. After all, it doesn't matter how wonderful the business, it is not worth buying unless it's selling below intrinsic value. Every investor must master the skills of business valuation. Essentially, business valuation is a method of determining the intrinsic value of a stock or business. I will cover details over next few sessions to develop reasonable understanding of 3M investing framework. It is a simple yet effective framework to simplify your investing process that can be used by any individual with minimum or no knowledge of stock market investing. Remember, the stock investing should be recognized as buying a fraction of business like owner rather than a ticker symbol with the expectation to sell at higher price to someone else in future. Your investing success will depend on business understanding and developing rational and independent thinking to succeed over longer term. Thank you.